Hey guys, so we are at the beach, as you can see. So technology is a little different than what we're used to using, but we're here and we're trading and we're looking at the cues. So this morning has been good so far. We've had lots of feedback from our friends and our fellow traders and the guys who we work with saying that they've got some really good trades off, whether it's in the Qs, the NU, the ES. Lots of things are just very persistent trend, and we had futures overnight that were way down on the Qs, and then by the time the morning rolled around, it was flat as a pancake and came in and just started booming to the upside again. So I don't know how much longer we've got, but for the time being, the trend is definitely up, and we've had lots of opportunities to go and hop on board and try to catch this wave and try to catch some of the inflections along the way that have been, again, very geometric in the way that they trade. All right, so we are still in search of sunshine. As you can see, it's not exactly a sunny day in Southern California. I think we've got sort of an El Nino kind of a situation going on here for months on end, and you might see us next from Palm Springs or somewhere, because we're going to find us some sunshine. That's one of the nice things about trading, of course, is you can do it from anywhere. So with that said, let me go to the charts and show you what I'm thinking. Here you have it. So you can see trading in the Qs started right around the central pivot. I know we had a couple traders who were able to capitalize on the open. That's always tough, right? It's always tough to catch that opening trade, but when it makes just a shallow dip like that into the central pivot line and then inflects and moves higher right away, that's a great trade if you can catch it. So if you caught that, then of course the next thing that happened was this trend move higher. And if you rode that all the way up there, congratulations, right? That's about $3 a share. I know one person who did it, and good for him. So they're following along. If you're following what we did at Super Vol Sunday, right at our QQQ training that we did in Las Vegas back in April, then this is the kind of thing that you were taught to focus on. This is the kind of thing that you were taught to look for, and of course, it's always beautiful when a plan comes together. Then, along the way, we had nice levels of support and resistance form, and you can see that on the swing move higher, right, you had this level of support and resistance that overlaps exactly with that anchored volume weighted average price, and that gave you the opportunity to get an entry right at support and ride it all the way up into that 367.92 level if you didn't catch the earlier move from the pivot. So not all was lost. If you didn't catch 364.17, then you had the opportunity to catch 366.53 and get on that wave as it moved higher. Came back down to 367.07 a couple times. That was also some good entry material there, right? It gave you that support a couple times, got up above R1, and it formed a nice top up there. So if you got out at first resistance at 367.92, then the next thing you saw happening was that this support and resistance level, which I just drew crooked, but you know what I'm talking about there. It's that blue dotted line that I was trying to get on top of. That formed right around 11:30 to 12 o'clock and gave us then another nice entry. So you had the opportunity to go long from the 367.75 level, or just right at that pivot, and then ride it back up into 368.87. So another, over $1 per share traded, no matter how you look at it. And it's just been that way today, right? It's been very geometric. You're getting, you can see in the top chart here, we've got a fib study drawn. So the fib of that big trend move that it made in the morning, right, here to here, and then back down to here is the 382, back down into here is a 50% retracement. Those all gave you good reasons to enter at the blue pivot, enter at that R1 level, and catch the move higher. And you also had confluence, right, with your two standard deviation retracements here. Those told you, it's likely to move back up at least into this area where the moving average is floating around. And all things considered, I think that when you take it all together and you look at the volume by price data, right, and the way that this is clustering right around these support and resistance levels that we drew. You've got lots and lots of things that are giving you confluence of indication saying these are the places to get long if the stock comes back to them. I wouldn't try to short this today just because of this, right? The obvious, the trend has been really, really strong. If I was going to look for a short, this thing would have to start, moving lower, probably back down into here somewhere, and then retrace up into this overhead volume weighted volume by price data, and then right around here you'd look for a move back down toward the central pivot. But for right now, I think the trend's pretty obvious, and it's easy to focus on what's right in front of you if you just keep it right in front of you and don't try to go and fade markets, and don't try to go and figure out when's this thing going to reverse. Just do what it's doing today, and if there's going to be a reversal, look for it on your daily and your weekly charts. Look for it on the bigger time frame, and just try to see when is this going to decide it is no longer tracking higher. So you have to find something on the larger time frame chart that says it's reversal time, or else you're just going to be fighting what the market's doing, and it's tough to ride out those swings to the upside if you happen to be short or have puts or something like that. It can be a painful endeavor and frustrating. All right, so that's it. That is my 2 cents for the day. I'm going to try to enjoy some time at the beach this afternoon, even though it's cloudy and messy and gray, and I will see you guys again tomorrow. All right, have a great rest of your trading day.